Hello, everybody. It's Nick Groves here, your host here with Trading Analytics, and today we're going to talk about what we're seeing in the earnings. We just had Meta come out. You can see they beat in most areas, but however, quarter two revenues are showing a miss right now. And you can take note that the stock is actually taking a bit of a tumble post close. So let me just get that updated for you here. So we have about right now a drop of around 12%, and things get really ugly because we're now in this giant gap here. This gap is about a 10% gap, I believe. So, if we actually come and close that gap at 408, that would entail a roughly, I think, a 17% drop. So things could get ugly out there. We saw Tesla yesterday come in. Their earnings were not too great. However, it rallied. So a bit of a mixed bag. We're going to have to see how the rest of the week plays out in terms of earnings. We do have Microsoft and Alphabet tomorrow, which are going to be two huge ones. But you can note, even right now, after that miss in, or after that selling in Meta, that even Google right now is taking a hit, down 2.7% after the close. You're also seeing Microsoft come off a little bit here. It's down, 1.4% following the close. And if I look at my Mag 7 chart, last week we came down near the 38.2 from the lows of October of 2023, but we held this trend line. We're right back on that trend line right now. Now, a lot can happen overnight, but this is an ugly sign for the markets. And I'm going to go ahead and dive into the S&P. The S&P, we have bounced, 3.3% off the lows, but as you can see here, it tried to regain this trend line that supported us back from April, and it's now closing below it. In the S&P cash daily put in a hanging man on the daily. So this is a reversal candle. So we could actually see the market come back down and take out these lows this week. It's entirely possible, especially with PCE on Friday. Things could get ugly. But I'm just going to go ahead and show you guys, I did take a long in the S&P down around 50.11. I took some profit off up here and I pressed. My average is now around 50.63. And the way that I'm playing it is I'm going to have my lows around 50.50. My stop loss around 50.50. If it gets taken out, then I'm out. But right now I'm relatively neutral. The tough thing is that we've, from this bounce, we could only really get up to the 38.2% retracement in the Nasdaq. Now, the 38.2 fib is the continuation fib, which implies that the market is likely, if this holds, to actually come back down through here. And I think what we could see is that the Nasdaq might actually want to take on from the lows of October of 2023. It might want this 17K level. I think it might want to come down and revisit it. The 38.2 comes in at 16,960. That's going to be a big level to watch in the event we come down. And I think that it's entirely possible. But I will also note that, the market could be, this looks like a bit of an inverted head and shoulder pattern, but I think that if the market can hold above, 50-50 or so in the ES, I think the risk is that we could actually regain these highs at 5,100. That's in the cash, 5,100 here. And if that occurs, then I do think that the market's likely to come and try and test this 5150 level, the 618. I know that doesn't seem likely, but this is a battle zone down here. We just corrected 5.5%. Bulls have an opportunity to step in. That opportunity might be somewhere around here. Just to show you the fibs here, a pullback a little bit further towards, this is 50.34 would be the 38.2 in the S&P cash, and then even a 50% retracement at 50.14. Revisit that 5K level is entirely possible as well. But for now, we just have to trade safe and be smart. As far as the broader market, the dollar index is still relatively range bound since it poked its head up here mid-April. But it is also in a bull flag at the moment, which does target much higher than here. I think that this actually targets up near 108. So I would be careful shorting the dollar, which is funny because I shorted it today. But if in the event that the dollar can't actually hold these highs and continue higher, I'm looking at the 105 level as support. That's where I'd like to press into dollar longs in the event we can get it. But it's tough. I'm not sure if we're going to get it. That's the whole point. And the U.S. 10-year bonds, it's still sitting up near highs. I have a feeling that the bonds actually want to come and test this 4.75 level in the US 10-year. That's a 786 of this big giant range. It's just getting too comfortable up here for me to think about shorting it. So yeah, and as far as the Dow goes, the Dow, it also came up to that 38.2, nudged above it just a bit. The 50% retracement from the fall is going to come in at 38,925. So just watch that level. If we decide to swipe the highs, that could be a level where sellers would step back in. But for now, if the market caps out where it did today in terms of a rally, this could get ugly. So just trade safe, be smart, and we will be updating you guys on Trading Analytics Twitter, where I'm posting some ideas throughout the day. Thanks so much, and I'll see you guys soon.